Question 1. An insured's health policy has a grace period of 31 days. If the premium is not paid by the due date, how long does the policy remain in effect before it lapses? A. 7 days. B. 10 days. C. 31 days. D. 60 days. Answer: C. 31 days. Explanation: the grace period is a specific time frame, typically 7, 10, or 31 days, during which an overdue premium can be paid without the policy lapsing. For a policy with a 31-day grace period, the coverage remains active for 31 days beyond the premium due date, even if the premium hasn't been paid. This provides a safety net, ensuring the insured remains covered for a short period while allowing time to submit payment, preventing immediate policy termination. Remember, if a claim occurs during the grace period, the overdue premium will be deducted from the benefit paid. Question 2. Under the Consolidated Omnibus Budget Reconciliation Act, COBRA, how long does an employee have to elect continuation of group health coverage after a qualifying event? A. 30 days. B. 45 days. C. 60 days. D. 90 days. Answer: C. 60 days. Explanation: COBRA allows certain employees and their families to continue their employer-sponsored health coverage for a limited time after qualifying events, like job loss or reduction in hours. Once notified of their COBRA rights, individuals typically have 60 days from the date of the qualifying event or the date the notice is provided, whichever is later, to elect to continue coverage. This 60-day election period is crucial because if the individual doesn't choose COBRA within this timeframe, they lose their right to continue the group health benefits. Question 3. All of the following are common types of basic medical expense insurance except: A. Hospital expense. B. Surgical expense. C. Physician's, medical, expense. D. Long-term care expense. Answer: D. Long-term care expense. Explanation: basic medical expense insurance policies are designed to cover specific, distinct medical services, such as hospital confinement, surgical procedures, and physician visits. These policies typically have lower benefit limits compared to major medical plans and often do not have a deductible. Long-term care expense insurance, however, is a separate type of policy specifically designed to cover the costs associated with extended care in a nursing home, assisted living facility, or at home, rather than acute medical care. Question 4. What is the primary purpose of a deductible in a health insurance policy? A. To prevent moral hazard. B. To reduce the policy's premium. C. To eliminate small claims. D. All of the above. Answer: D. All of the above. Explanation: a deductible is the amount of money an insured must pay out of pocket before their health insurance policy begins to pay for covered services. Deductibles serve multiple purposes. They deter individuals from filing small, frequent claims, known as eliminating small claims. They make the insured share in the cost of care, which helps to prevent moral hazard, the tendency to be less careful when insured, and by doing so, they significantly help reduce the policy's overall premium cost. Think of it as your initial contribution before the insurance company steps in. Question 5. In an HMO, what is the role of a gatekeeper? A. To process claims for reimbursement. B. To refer members to specialists. C. To determine the premium rates. D. To conduct medical underwriting for new members. Answer: B. To refer members to specialists. Explanation: in a health maintenance organization, HMO, a primary care physician, PCP, acts as a gatekeeper, coordinating all of the members' healthcare services. This means that if a member needs to see a specialist, they typically must first consult their assigned PCP, who then provides a referral. This system helps control costs by ensuring that specialist visits are medically necessary and that members receive appropriate care within the HMO's network. Remember, the gatekeeper system aims to manage care effectively and keep costs down by guiding members through the healthcare system. Question 6. Medicare Part A covers which of the following? A. Physician services and outpatient care. B. Prescription drugs. C. Hospital inpatient services. D. Medical equipment and supplies. Answer: C. Hospital inpatient services. Explanation: Medicare Part A, also known as hospital insurance, primarily covers inpatient care in hospitals, skilled nursing facility care, hospice care, and some home health services. It is generally premium-free for most individuals who have paid Medicare taxes through their employment. Conversely, physician services and outpatient care are typically covered under Medicare Part B, while prescription drugs fall under Medicare Part D. Question 7. If an individual pays the premiums for their individual disability income policy, how are the benefits received generally treated for tax purposes? A. Taxable as ordinary income. B. Taxable only if exceeding a certain amount. C. Partially taxable. D. Received income tax-free. Answer: D. Received income tax-free. Explanation: when an individual pays the premiums for their own disability income policy with after-tax dollars, the benefits received if they become disabled are generally received income tax-free. This is because the premiums were paid with money that had already been taxed, so the IRS does not tax the benefit payments again. This principle provides a significant advantage for those who become disabled and rely on these benefits for income replacement. Conversely, if an employer pays the premiums, the benefits are typically taxable to the employee. Question 8. A long-term care policy typically requires that a person be unable to perform a certain number of activities of daily living, ADLs, to trigger benefits. Which of the following is not commonly considered an ADL? A. Bathing. B. Dressing. C. Driving. D. Eating. Answer: C. Driving. Explanation: activities of daily living, ADLs, are fundamental self-care tasks used as criteria to determine eligibility for long-term care benefits. Common ADLs include bathing, dressing, eating, transferring, moving from bed to chair, toileting, and continence. The inability to perform a specified number of these activities, usually 2 or more, often triggers the payment of benefits under a long-term care policy. Driving is not considered an ADL because it is not a basic self-care function but rather an instrumental activity of daily living, IADL, which involves more complex tasks. Question 9. The time limit on certain defenses provision in a health insurance policy generally states that after how many years from the policy's issue date can an insurer not deny a claim based on misstatements in the application, except for fraudulent misstatements. A. 1 year. B. 2 years. C. 3 years. D. 5 years. Answer: B. 2 years. Explanation: the time limit on certain defenses, also known as the incontestability clause, in some contexts for health insurance, protects the insured by limiting the period during which an insurer can deny a claim due to material misstatements on the application. Generally, after 2 years from the policy's issue date, the insurer cannot void the policy or deny claims based on inaccurate information in the application, unless the misstatements were fraudulent. This provision encourages insurers to promptly investigate applications and gives policyholders peace of mind that their coverage won't be easily challenged after a certain period. Question 10. How many days is the free look period typically for health insurance policies? A. 5 days. B. 10 days. C. 20 days. D. 30 days. Answer: B. 10 days. Explanation: the free look provision, also known as the right to examine period, allows a new policyholder to review their health insurance policy for a specified number of days, commonly 10 days, though it can be longer for certain policies like long-term care, often 30 days. During this period, if the policyholder decides they don't want the policy for any reason, they can return it to the insurer for a full refund of the premium paid. This provision ensures consumer satisfaction and protection by giving individuals time to ensure the policy meets their needs after delivery. Question 11. Which federal act established standards for health information privacy, security, and portability? A. ERISA. B. COBRA. C. HIPAA. D. ACA. Answer: C. HIPAA. Explanation: the Health Insurance Portability and Accountability Act, HIPAA, of 1996 is a significant federal law that established national standards for protecting sensitive patient health information from being disclosed without the patient's consent or knowledge. It also addressed the portability of health coverage when individuals changed jobs, ensuring that individuals wouldn't lose coverage due to pre-existing conditions. HIPAA's privacy and security rules are fundamental to how healthcare providers and insurers handle personal health data. Question 12. Which of the following is characteristic of a preferred provider organization, PPO? A. Members must select a primary care physician, PCP. B. Referrals are required to see specialists. C. Members pay less if they use in-network providers. D. All care must be provided by the PPO's network. Answer: C. Members pay less if they use in-network providers. Explanation: a preferred provider organization, PPO, offers more flexibility than an HMO, allowing members to choose any healthcare provider, either in-network or out-of-network. However, the key characteristic is that members receive a higher level of benefits and typically pay less in deductibles and co-payments when they choose providers who are part of the PPO's network. This incentivizes using network providers while still allowing the freedom to go outside the network at a higher cost. Question 13. What is the purpose of the Coordination of Benefits, COB, provision in group health insurance policies? A. To determine if an employee is eligible for coverage. B. To prevent an insured from collecting more than 100% of actual medical expenses from multiple group policies. C. To coordinate Medicare benefits with group health benefits. D. To determine which insurer is primary for dependents. Answer: B. To prevent an insured from collecting more than 100% of actual medical expenses from multiple group policies. Explanation: the Coordination of Benefits, COB, provision is designed to prevent overinsurance when an individual is covered under more than one group health insurance policy, such as through two employers or a spouse's plan. It establishes the order in which multiple plans pay claims, ensuring that the total benefits paid by all policies do not exceed 100% of the actual medical expenses. This prevents an insured from profiting from an illness or injury by receiving more in benefits than the cost of care. Question 14. An insured's health policy specifies that the insurer cannot cancel the policy, but can increase premiums for the entire class of policyholders. This is an example of what type of renewability provision? A. Non-cancelable. B. Optionally renewable. C. Conditionally renewable. D. Guaranteed renewable. Answer: D. Guaranteed renewable. Explanation: a guaranteed renewable provision means the insurer cannot cancel the policy, and must renew it, as long as the policyholder pays the premiums. However, the insurer retains the right to increase premiums, but only if the increase applies to an entire class of policyholders, not just an individual. This provides a balance of security for the insured, guaranteed coverage, and flexibility for the insurer, ability to adjust rates for groups based on claims experience. Question 15. Which type of policy provides benefits for a specific disease, such as cancer or heart disease? A. Major medical. B. Comprehensive health. C. Dread disease. D. Indemnity plan. Answer: C. Dread disease. Explanation: a dread disease policy, also known as a critical illness policy, is a specialized health insurance plan designed to pay a lump sum benefit directly to the insured upon diagnosis of a specific, serious illness listed in the policy, such as cancer, heart attack, or stroke. Unlike major medical plans, which cover a broad range of medical expenses, these policies focus exclusively on catastrophic illnesses. This type of policy helps cover expenses beyond typical medical bills, like lost income or experimental treatments. Question 16. What is the purpose of an elimination period in a disability income policy? A. To reduce the policy's premium by delaying when benefits begin. B. To allow the insurer to investigate the disability claim. C. To encourage the insured to return to work quickly. D. All of the above. Answer: D. All of the above. Explanation: an elimination period, also known as a waiting period, is a time deductible in a disability income policy. It's the period between the onset of a disability and the date when benefit payments actually begin. This period serves several purposes. It helps reduce the policy's premium by making the insured wait for benefits, it allows the insurer time to verify the validity of the claim, and it encourages individuals with short-term disabilities to return to work, as benefits won't kick in immediately. The longer the elimination period, the lower the premium. Question 17. Which of the following is typically a feature of most managed care organizations, MCOs? A. Unlimited choice of providers with no network restrictions. B. A focus on preventive care and cost containment. C. High deductibles and co-payments for all services. D. Reimbursement of services on a fee-for-service basis. Answer: B. A focus on preventive care and cost containment. Explanation: managed care organizations, MCOs, such as HMOs and PPOs, are healthcare delivery systems designed to control costs while improving the quality of care. A key characteristic of MCOs is their emphasis on preventive care, like regular checkups and screenings, which aims to keep members healthy and reduce the need for more expensive treatments later. They also employ various cost containment strategies, such as negotiated fees with providers, utilization review, and gatekeeper systems. Question 18. Under the Affordable Care Act, ACA, what is a key requirement for health insurance plans regarding pre-existing conditions? A. Insurers may impose a waiting period of up to 12 months for pre-existing conditions. B. Insurers can deny coverage to individuals with pre-existing conditions. C. Insurers cannot deny coverage or charge more for individuals with pre-existing conditions. D. Pre-existing conditions are only covered after an individual has continuous coverage for 24 months. Answer: C. Insurers cannot deny coverage or charge more for individuals with pre-existing conditions. Explanation: a cornerstone of the Affordable Care Act, ACA, is the prohibition against insurers denying coverage or charging higher premiums to individuals based on their health status, including pre-existing conditions. Before the ACA, many people with chronic illnesses found it difficult or impossible to obtain affordable health insurance. This provision ensures that everyone, regardless of their health history, has access to health coverage in the individual and group markets. Question 19. An insured has a health insurance policy that pays a fixed amount for each day they are hospitalized, regardless of the actual medical expenses. This is an example of what type of policy? A. Indemnity plan. B. Service plan. C. Comprehensive plan. D. Major medical plan. Answer: A. Indemnity plan. Explanation: an indemnity plan in health insurance pays a predetermined, fixed benefit directly to the insured for a covered event, regardless of the actual expenses incurred. For example, a hospital indemnity plan might pay $100 per day for each day of hospitalization. The insured then uses this payment to cover their medical bills, or any other expenses, and can keep any remaining money. This differs from service plans or major medical plans, which typically pay directly to the providers or reimburse the insured based on actual charges. Question 20. What is the primary difference between a medical expense policy and a disability income policy? A. Medical expense policies cover doctor visits, while disability income policies cover hospital stays. B. Medical expense policies pay benefits to providers, while disability income policies pay benefits directly to the insured. C. Medical expense policies cover the cost of medical treatment, while disability income policies replace lost income due to inability to work. D. Medical expense policies are typically group policies, while disability income policies are individual policies. Answer: C. Medical expense policies cover the cost of medical treatment, while disability income policies replace lost income due to inability to work. Explanation: this is a fundamental distinction between these two types of health insurance. Medical expense policies are designed to pay for the costs associated with healthcare services, such as doctor visits, hospital stays, and prescription drugs. In contrast, disability income policies provide a regular income stream to the insured if they become unable to work due to illness or injury, replacing their lost wages. One covers bills, the other covers income. Question 21. Which type of care is not typically covered by standard health insurance plans and requires a separate policy? A. Emergency room visits. B. Routine dental care. C. Hospitalization for surgery. D. Prescription drugs. Answer: B. Routine dental care. Explanation: while some comprehensive health plans may offer limited dental benefits, routine dental care, including cleanings, fillings, and orthodontics, is generally not covered by standard medical expense health insurance policies. Instead, individuals typically need to purchase a separate dental insurance policy or a dental rider added to their health plan to cover these services. This distinction is important for understanding the scope of coverage provided by different types of health policies. Question 22. All of the following are common exclusions found in health insurance policies except A. Self-inflicted injuries. B. War or acts of war. C. Routine preventative care. D. Injury sustained while committing a felony. Answer: C. Routine preventative care. Explanation: health insurance policies commonly include exclusions for certain types of injuries or treatments to manage risk and prevent misuse. Self-inflicted injuries, injuries sustained while committing a felony, and injuries or illnesses arising from war or acts of war are standard exclusions. However, routine preventative care, such as annual physicals, immunizations, and screenings, is typically covered and often encouraged by health plans, especially under the Affordable Care Act, to promote wellness and reduce future, more expensive health issues. Question 23. What is the purpose of the entire contract provision in a health insurance policy? A. It states that the policy and a copy of the application constitute the entire contract. B. It outlines the conditions under which the insurer can void the policy. C. It specifies the method for premium payment. D. It describes the benefits covered under the policy. Answer: A. It states that the policy and a copy of the application constitute the entire contract. Explanation: the entire contract provision is a mandatory uniform provision in health insurance policies. It states that the policy document itself, along with any riders, endorsements, and a copy of the original application, forms the complete and exclusive agreement between the policy owner and the insurer. This means that nothing outside of these documents can be used to alter or interpret the contract, protecting both parties by clearly defining the terms and preventing additional outside agreements. Question 24. What is the role of the agent/producer during the underwriting process for health insurance? A. To make the final decision on policy issuance. B. To collect initial premium and deliver the policy. C. To complete the application accurately and gather relevant information from the applicant. D. To approve or deny claims submitted by the insured. Answer: C. To complete the application accurately and gather relevant information from the applicant. Explanation: the agent/producer plays a crucial role as the field underwriter during the application process for health insurance. They are responsible for accurately completing the application, asking all questions truthfully, and gathering all necessary information from the applicant, including medical history and lifestyle details. This information is then submitted to the insurer's underwriting department, which uses it to assess the risk and determine whether to issue a policy and at what premium rate. Question 25. Which type of dental plan categorizes services as Class 1, preventive, Class 2, basic, and Class 3, major? A. Scheduled plan. B. Comprehensive plan. C. Indemnity plan. D. Orthodontic plan. Answer: B. Comprehensive plan. Explanation: a comprehensive dental plan is the most common type of dental insurance, often categorizing services into different classes to apply varying levels of coverage or deductibles. Class 1 typically includes preventive care like cleanings and X-rays, often 100% covered. Class 2 covers basic services such as fillings and simple extractions, often 80% covered. Class 3 covers major services like crowns, bridges, and dentures, often 50% covered. This structure helps manage costs and encourages preventive care by offering higher coverage for less expensive, routine services.